Maple Finance with the Syrup token is the top performer recently. The question is why? Is this a pump and dump orchestrated by a few whales? Is this all manipulation, or is actually the platform getting used? It seems like there is some substantial growth. Let's have a look at the data most people are not considering. Let's try to figure out where the Syrup price is going from here. So this is what I'm referring to. Among the top 100 largest cryptocurrencies, Maple Finance performed the best in the last 90 days, an increase of almost 400%. And it looks like this is happening for a good reason. This is how much capital is locked in the Maple Finance protocol. We were constantly below 100 million in the last few years, but then in 2024, we've seen a nice recovery that's now accelerating. There's $1.6 billion in the platform. And no matter if it's measured in US dollars or in Ethereum, the growth looks impressive, irrespective of the benchmark. Now, Maple Finance is a platform where you can deposit our stablecoins, and then institutional investors can borrow from those liquidity pools. The returns aren't necessarily mind-boggling, but it's still better than depositing your stablecoins on Aave, for instance. 7.1% APY for the blue chip, 9.8% for the high yield product. On top of the borrowing and lending product, there's also a staking program that currently returns 3% APY. Now let's have a look at the on-chain metrics. We've got more than 10,000 holders on the Ethereum chain. There's actually two versions of the token. There's one on Ethereum, there's one on the Binance Smart Chain. The Binance Smart Chain though has only 1,000 holders. It's not really that important in the grand scheme of things. Let's focus on Ethereum first. There's actually not that much trading on chain. So there are only 68 wallets that interacted with the largest liquidity pool on Ethereum. The protocol revenue, however, continues to climb. The last 2 months have been above 1 million in pure revenue, more than double of what we have seen just 3 months ago. Maple Finance has its own staked stablecoin, that's Syrup USDC. There's 588 million stables floating around, which is used in Spark, Pendle, and Morpho. Now, this increase in capital is fueled by one thing, and that is the native stablecoin. It's the Syrup USDC. Without it, the assets under management for Maple wouldn't grow as quickly. It would still be positive, but nowhere near the growth we currently observe looking at all of the assets in the protocol. Now, what makes Maple Finance different to other borrowing and lending platforms in decentralized finance? With Aave, we've got everything on chain. We provide our collateral, and then we have an over-collateralized loan. So let's say we provide $1 million, let's say Bitcoin, and then we can borrow, say, $500,000 against this. We need to have more collateral than what we can borrow. This is specific to decentralized finance. It's not a limitation that traditional finance has. In traditional finance, we can borrow against our estimated future cash flows, right? This is what, say, personal loans are built on. You have to show that you've got a job, that you've got regular income, and you can borrow against this. And so that's usually the main credit driver, right? It's anticipated future returns, future cash flows, and we're just taking those future cash flows to the present we are borrowing. We don't want to necessarily just have leverage on whatever assets we already have. This is what Aave is serving. It's not what Maple Finance is serving though. So the individual borrower, the individual institution can borrow. As a platform overall though, there is more total value locked than outstanding debts. That is what is meant over here, right? Over collateralized loans to institutional borrowers. This is actually not how Maple Finance is selling their product to those institutions, but it is how they are selling it to the masses that deposit the money, right? There is more money in the pool than loans taken out by the institution. And so in the end, Maple Finance is in the middle ground of the very safe Aave protocol, where there's everything transparent on chain, and the very unsafe centralized exchange borrowing and lending, right? The thing that blew up the Three Arrows Capital, the Genesis, etc. There's collection of the funds on chain, but the loans are still made off chain to accredited investors, but still in the end, it's all off chain. It's still trust me, bro, I will make the money back. But crypto is crypto, and crypto wants to make money. And so, of course, there is more demand for the high yield versus the blue chip product. In the high yield capital pool, there's 83 million worth of stablecoins, while in the blue chip product, there's only 37 million. Now let's have a look at the trading activity on chain. So this is now Ethereum. Here's the number of new users versus returning users over time. There's not really anything noteworthy here. There's no clear trend. It doesn't really look like anything is particularly heated, but we do see that over the long term, the number of buyers and sellers is increasing over time. The ratio of buyers to sellers is somewhat constant. There's more buyers than sellers most days. There's clearly long-term adoption over time. So this is the number of retail investors versus whale investors over time. So this is growing quite constantly. The way we make this distinction is by counting wallets that have at least a minimum number of syrup tokens in their wallet. So for the chart on the left, it's at least 2,000 tokens. At the current price, that's roughly $1,000 worth of the token. So there are 3,000 such wallets now on the Ethereum chain. So roughly a third of all holders have at least 2,000 tokens. In the middle, we go a 10x from that. So that's now 20,000 tokens or $10,000 worth of the token. On the right, another 10x. So that's now $100,000 worth of the token. The accumulation happens across the board. This is very, very good. And it does explain why Maple Finance is the best performer in the top 100. But on top of all of that accumulation, we also have some short-term leverage in the price as well. Because there's more trading volume on the perpetual futures market than on the spot market. On the perps, we have 97 million worth of trading volume on Binance. On the spot market, there's only 30 million. So as the spot price is increasing through the long-term accumulation by all of those wallets, we now see also the short-term perpetual futures traders entering the token. So the open interest is going in line with the syrup spot price. But again, the spot price started it all. It was not the short-term leverage that pushed it all up. There is a clear long-term accumulation trend that's very healthy. Now, everything looks super healthy here, right? There is more and more adoption. We are now in the billions of dollars of total value locked. There is a bit of a cautionary tale though. And so because of that, there's always the potential risk for a sudden implosion of the entire protocol. We have seen this in the past, so it's always important to stay cautious. I think it's likely that at least medium term, the usage of the protocol will continue to increase and with it the syrup price. However, I think it's also important to have proper stop losses in place because there's always a chance that at some point, one or two of those institutional borrowers have a problem to pay back the loan, and then really things get tested. The Terra Luna protocol with the UST stablecoin did not survive that test, right? It all looked very nice up until that one day, Thanksgiving Day. That's when the turkey suddenly got very unhappy. And so riding the current wave, potentially with a trailing stop loss might make sense, right? So as the price rises, we just adjust the stop loss. And then if at some point doubts arise, we just exit very, very quickly. That's one potential strategy. I don't think it makes sense too much to provide capital to the platform just for, say, 9% APY. There's way better opportunities in crypto to generate more returns with potentially even less long-term risk. My favorite way to make money in crypto in this market is to just continue on those very bad tokens, as in the small altcoins that continue to underperform Bitcoin because the insiders are selling and maybe the team is selling and maybe the early investors are selling. Because of that long-term underperformance of so many altcoins, I think that's an opportunity. I think we can make money from that much easier. Because most of those altcoins went down in the last year, while Bitcoin still went up 50 or 60%. And so why not just flip this around, right? Why don't we just make money when all of those altcoins go down and we short them basically? So yes, you could simply just stick with Bitcoin and forget about altcoins altogether. But when you're shorting an altcoin at the same time while you go long Bitcoin, you can have returns like this. This is what I'm personally doing. Had I just dollar cost averaged into Bitcoin, I would have gotten this light gray return. But because I'm shorting poorly performing altcoins at the same time, I got the black performance. So this is the last 4 years roughly. This is a monthly chart and it's several small trades that make a lot of money long term that compound over time. I made dedicated tutorial videos on that strategy. So how to do this with platforms like Aave, but also how to do this with perpetual futures like Hyperliquid. How do we set up those positions and how do we, and that's maybe even more important, do proper risk management with an approach like this? Because even if we've got a win rate of 70 or 80% when we short these tokens, we don't want to lose everything in the 10 or 20% where things don't play out. Not every single one of those assets is red, right? Some of them still go up. I'm of course sharing my own trades as well. So here at the bottom, that's the chart that I'm currently shorting, where I'm currently betting on falling prices, making money consistently. And then it's always nice to see the community sharing their trades as well. The individual trades, the individual percentages are always interesting. It's always somewhat entertaining, but really it's the long term that matters. I'm not sure how many people are actually willing to disclose those kind of numbers. So feel free to check it out. It's currently $125 per month. This rate will stay. So everybody that signed up will keep the rate. Any future price increases only affect the new signups, not the people that are already subscribed. So a link to premium should be over here on the screen. Just click on that. It will bring you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.